Hello everyone, welcome back to the another session of accounts with Shiva Kumar from Gitanjali Junior College. Today's topic is journal entries. The basic journal entries, how they are prepared and what is this procedure to be followed and what is the schedule. We call it pro forma table. We call this as pro forma in accounts language. This table is called as pro forma. So in the last class, for this class you need to follow the last class where we have discussed personal, real and nominal account rules for personal, that is debit the receiver, credit the giver. Real, debit what comes in, credit what goes out. In the last class we missed with one of the point, that is real. The word itself is telling that what is really existing. Along with that we have some more things. Real is further divided in tangible and intangible. Tangible are those things which we can touch. Marker is a tangible thing because I can touch this, right? And intangible, there are some concepts like goodwill, the name and fame. Can we touch that? No. Patents, trademarks, and these are some of the intangible assets. So that also comes in the real. Okay, whenever we are discussing with the problem, we will see to with that. And the last account is nominal account. Debit all expenses and losses, credit all incomes and gains. In a shortcut I wrote that. In the last class we have the total briefing about that. Okay, so now today we are starting with the journal entries. For journal entries we need to follow this table. We call this as pro forma. Okay, journal entries is the first step of accounts. If you are an accountant, the first step what you prepare is journal entries. Okay, all the business transactions are recorded at first in the journal book only. Okay, now before starting up with the problem, we'll try to understand this pro forma. Okay, there are 1, 2, 3, 4, 5 columns in this pro forma. The first column is for date. Whatever date the transaction is happening, we need to record that. Date, either date लिखना है. Let us suppose today's date is what is today's date? 9th of June 2022. Write it that. Okay, so just you need to write the date. Particulars, after completing this I'll come to particulars. This is LF, ledger folio. Ledger folio, F stands for folio. Folio is meant by page number, because ledger is the first place where we are recording the transaction. After that we will classify this. We will separately writing a similar kind of accounts, similar kind of items at one account. Okay, all the purchases at one place, all the sales at one place. So whatever is here, we need to write it in the ledger book. There we will write the page number, because after whenever you are verifying your accounts, whatever is written here in ledger book, where it is written, ledger book, how many books you will be searching for that. So to make that easy, you need to write the page number where next your journal is followed, that is ledger posting. After recording this journal, writing the transaction in journal entry is called recording. After this we will post it in the ledger book. Posting, we call that as process as posting. While posting, where you are posting the page number, that will make easy for our next references. Next one is debit amount and next one is credit amount. whatever the debit amount is there, you need to write it in the debit amount side, a column, and credit amount in the credit column. Now, I have drawn two imaginary lines. Actually, you should not draw these lines. Why I have drawn this is, for any journal entry, there are three lines. First one is, according to me, that's debit line. Second one is credit line. And third one is narration line. Now here, whatever you are debiting, you will write it in the debit line. And whatever you are crediting, you will write it in the credit line, because second line is the credit line. And in the third line, that is narration, is written here. I'll explain once again with an example. Okay? Purchased computer from Ram for 10,000. This is the question. Purchased computer from Ram for 10,000. We have purchased a computer from Ram for rupees 10,000. Right? Question is simple. Now, whenever you are purchasing anything, that is a item. Computer is a product, right? That is a tangible thing. Now that is coming into the business. What is coming into the business? Computer is coming in. So I will see the real concept. Real concept is telling that debit what comes in. Now what is coming in? Computer is coming in. So debit, according to real, I found this debit. That debit what comes in? What is coming in? Computer. Computer account data. Now I don't know why we write this word as data, but we follow stating that just to imply that this line is debit line, we write data over there. Otherwise, there is no reason behind writing DR, a word called DR, at the end of this line. Not in the middle or not after the computer account. At the end, you need to write the data. This is a compulsory thing to be followed. The only reason is just to identify that as to be a debit line. That is only the information available in the books of accounts. Okay. Now, how much is the amount? Debit amount? 10,000. Okay. Next, coming to the next line. We have completed with the debit aspect. Now we will see with the credit aspect. Purchased computer from Ram 10,000. Here, cash is paid. Information is provided? No, not provided. Cash is not provided. So, we are bringing this computer from Ram on the basis of credit. Now, Ram is a person. Ram is a person. Here you can see personal rule. Debit the receiver, credit the giver. Now, we bought the computer. Computer is coming in. Now, we are receiving the computer. Who is giving this computer? Ram is giving. So, Ram is in the position of the giver. Okay. So, according to personal rule, credit is telling that credit the giver. So, here to Ram account. How much is that? 10,000. How much is that? 10,000. Next, here you will having a doubt. Sir, why did you start the credit line with a tab space? Tab space, how much is the tab space? Usually five times pressing the space button in the keyboard of a computer. Once you can press tab, so that it will move 5 space. Simply in your book you can see 1 inch gap. After that you should start, that is you should start with 2. You should start with 2 and 2 RAM account 10,000. Now how to read this journal entry? People don't know how to read this. Now we have understood how to write it, but we don't know how to read this. We should read this as computer account data to RAM account. This is the way to read a transaction. That is journal entry. Computer account data to RAM account 10,000. Now last one is narration. Narration, we should start narration with a word called being. Okay? We should start the narration with a word called being. Here comes a question, what is narration and why we are writing? Narration is simply the explanation of that transaction. Now today you are an account student, so you will understand why this computer is being debited and why this RAM is credited. You understand this because you read the subject. But for example, we are working as an accountant. Does our owner has the knowledge about the rules for debit and credit? What is debit, what is credit, what is debit amount, credit amount, what is this data, creditor? Does he has this knowledge all? No, he don't have all the knowledge. If he has all the knowledge, he will not hire us as an accountant. He will only prepare his accounts. So, narration, we write the narration only with one intention, that with that narration line, let us suppose I will write here, being computer purchased from RAM. Close it here. Okay, simply your narration should complete in one line. Being computer purchased from RAM. While reading with this narration, not only you, even a layman who is not having the knowledge about the accounts, he will also understand that being computer purchased from RAM. So computer purchase करे RAM के पास बोल के कोई भी एक नॉर्मल इंसान को भी समझ में आ जाएगा. So narration is written for that reason. Okay. So this is the question, this is the answer. This is how you need to write. So date, whatever the transaction date is there, you need to write with that transaction. Okay. So we will see with the next question. Now here I have taken some goods purchased and goods sold transactions. These are the transactions. Now one by one we will record it in the journal. So first one, these 4, 5, 8, 9, 13, 14, 17 are dates. Okay. Now on 4th of June 2022, brought goods from Shankar for rupees 8,000. What is the question? Brought goods. Now you are bringing goods. Brought goods is nothing but purchased goods. Okay. From Shankar for rupees 8,000. Now have we paid 8,000 rupees cash to Shankar? Is question telling about that? No. Question is not telling that. It means it is a credit purchase. Now, first with any of the transaction, what I see is, first I see the real account rules. What is coming in, what is going out. That will make us easy. you also start with the real one. Okay. Now, first, any transaction, check what is coming in and what is going out. Brought goods from Shankar for 8,000. Brought goods बोले तो purchase. What are goods? First understand this. This word is really important. Even if most of the students studying post graduation, they also don't know what is meant by a good. What is a good? Whatever product you are purchasing is not a good. Whatever product you are purchasing with an intention to sell it and make some profit. Purchasing a product and with an intention to sell that and make some profit is called good. If you are purchasing a computer, in the last case we have seen, we have purchased the computer. Computer was for business use. Our intention was not to sell it and make some money. We just purchased that computer for our personal office use. So that is not a purchase. That is purchase of an asset. Now we are seeing the purchase of goods and sale of goods. Now brought goods. Brought goods is nothing but purchased. What is purchase? Purchase is an expenditure for the business. If you are purchasing anything, that is an expenditure for you or not? Yes, really it's an expenditure. So, expenditure and income, where nominal account is talking about that. Debit all expenses and losses. Expense na, purchase is an expense na. So according to the nominal account rule, all the expenses should be debited. Now purchase is an expenditure, so I am debiting that. So you write it in the first line, purchase account debtor. This is debit. Now we need to find out the credit. Brought goods from Shankar. Name. We have a name. Whenever if you see a name, that where we are following, we are going with the personal account. If there a person is involved, that is Shankar. How much? Shankar 8,000 rupees. Now Shankar is in the position of receiver or giver. We are bringing the goods. Now Shankar is giving, right? When Shankar is giving, then only we can bring that. So Shankar is the giver and we are the receiver. So credit, personal account rule, credit is telling that whoever is the giver, credit him. Now in our case, Shankar is receiver or giver? Giver. So credit him. So to Shankar account, how much is the amount? 8,000. Debit amount 8,000. Now most of the students, what they do a mistake in writing the amounts. So this is debit amount and this is debit line. This is credit amount and this is credit line. You should not write 8,000 here, both on the same line. No, because this is debit line and this is debit amount. And you should not write the credit amount in the first line also, because this is debit line. First one is the debit line. Second one is the credit line. The next, what is to be written here? Narration. Narration will start with a word called being. Now, being goods purchased from Shankar. This is the narration. Okay, close this by drawing a line, because next transaction and this transaction should not mingle up. Just to separate them, we draw this line. Okay, so first question we have completed. So I'll rub the question because here there is no space, so I made it clumsy so that once completed I'll rub the question. Now second question, try to understand the question first. Sold goods to Naresh for cash rupees 12,000. Sold goods to Naresh for cash 12,000. Now, first reading, as I read the question, I follow with the real account rule. What is coming into the business and what is going out of the business. Now, what is coming into the business? Sold goods. We are making the sale. Sold goods both sale na? We made a sale, right? Whenever we are making a sale, goods will go out. And to Naresh for cash 12,000. This is cash sale, not the credit sale. So we are selling the goods and we are receiving the cash. Now what is coming into the business? 12,000 rupees cash is coming. What is going out? Goods are going out. Whenever goods are going out, we call it as a sale. Now whenever we are making a sale, that is an income for us. सेल करें तो इनकम होगा, परचेस करें तो एक्सपेंडिचर होगा. So first, what is coming in debit? What comes in? What is coming in this transaction? Cash is coming in. Okay. According to real rule, debit what comes in? Debit what comes in? What is coming in? Cash. Cash account debtor. 2. Now. What is that? Sale. Sale is an income for us. Nominal account rule, the credit point is telling that credit all incomes and gains. Credit all incomes and gains. So whenever you are making a sale, that's an income for you or not? Yes, definitely it's an income for you. So credit your income. That is sale. Okay. So, narration, being goods sold for cash. Okay. Now you might be confusing, sir, here you have not taken the name of Mr. Naresh. Not necessary, because cash is coming in and goods are going out. Sale is an income for us. So according to nominal account credit rule, credit all incomes and gains. So I have created sale. So no chance of taking the name. Person is involved, but not necessary here. According to our debit and credit rules, we should not take that person's name. So close this. What is the amount? 12,000. Debit line 12,000 and credit line same amount 12,000. Okay. Now we have completed the second transaction also. Third one, purchased goods for cash rupees 5,000 from Suresh. Now from Suresh you have purchased the goods and paid in the cash. So first follow with the real account. What is coming in, what is going out? Goods are coming in. What is going out? Cash is going out. Whenever we are purchasing anything, goods are coming in, right? Yes or no? Now for that you paid cash. So cash is going out. Debit what comes in, credit what goes out. Here. Now, goods are coming in. And now purchasing of goods is an expenditure for you. So debit all expenses and losses. So debit purchase. Purchase account. Debtor. 2. What is going out now? Goods are coming in and cash is going out. Cash is going out. So credit what goes out? Real credit rule. Credit what goes out? Cash is going out, so I am crediting. So narration is being goods purchased for cash. How much is the amount? 5,000. So debit line 5,000 and the credit line 5,000. So this is how you need to write the transaction. And you should also write the dates. This is 5th date, I guess, 5th June, and this is 8th June 2022. 2022. Okay, so we will solve the next three also. For that, I'll rub this first. So this transaction is completed. I'll rub this also. Next, the date is 9th of June 2022. Sold goods on credit to Mahesh rupees 15,000. Now you have made a sale. Sold goods is nothing but sale. You have made a sale on credit. Now you are not receiving the cash. This is a credit transaction. So in a credit transaction, person is involved. For that, we need to check with the personal account rules. Now, sold goods. Sold goods. Whenever you are selling goods, is anything coming in and going out? Goods are going out, right? So credit what goes out? Credit what goes out? To sales. And sales, whenever you are doing a sale, that is an income point of view for the business. So nominal account rule is telling that credit all incomes and gains. Sale is an income for me, so I am crediting that. Now whenever I am making a sale, am I receiving cash here? No, I am not receiving cash because this is a credit transaction. Now who is involved in that transaction? Mr. Mahesh. A person is involved. So check with the personal rules. Debit the receiver, credit the giver. Now you are making a sale. You are making a sale. Now you are in the position of giver. Now who is receiving these goods? Mr. Mahesh is receiving the goods. So debit the receiver. So debit Mahesh. So Mahesh account data to sales account. What is the amount? 15,000. Right? Write the narration. Being goods sold on credit. If you have space, you even write goods sold on credit to Mahesh. Okay? Done. The transaction is completed. I always go a little slow because making a video fast is not important. And student should understand. The person who is listening to the class, he should clearly understand, and he should not have any second opinion or second option or second chance. If he is listening to my class, it will take a 5 minutes more when compared with others, but I can tell you, taking time only to explain it in a deep manner. Okay, to make the video fast, I should skip some points. So I don't want to skip anything. I want all the basic points to be covered, because if you know how to prepare journal entries, the first step of an accountant is done. The first step of accounts is done. In any of the accounts, the first step is journal entries. So this is to be understood with conceptual wise. Okay. So next question. Goods returned to Shankar on account 600. 600 rupees goods have been returned to Shankar on account. On account means you are not, cash is not involved in that. Whenever your goods returned to Shankar and you are not taking cash on account. On account means we are not taking the cash. Goods returned to Shankar. if is anything coming in? No, goods are going out because we are returning that. Whenever we are returning that, goods are going out. So write it here on the credit. Credit what goes out, goods are going out. Goods return account. Credit is goods return account. Now, cash is not involved. Person is involved, Shankar. So check with the personal rules. Debit the receiver and credit the giver. Okay. Shankar is receiving the goods because we are giving the goods and he is receiving the goods. So debit Shankar. So Shankar account data to goods return account. Narration being goods returned to Shankar. Okay. Narration is simple. Same, you can copy with the question. Whatever the question is, you can write the question also in the narration. Okay. I told you why narration is written. A common man, a layman, a rational man who is not having any knowledge about accounts should also understand what happened in this transaction. See, Shankar account to goods return account, normal person cannot understand that. But being goods returned to Shankar, then he will understand that says goods have been returned to Shankar. What is the amount? 600. So debit 600 and in the credit line also 600. Done? Understood, students? Hope you have understood. Next one is cash sales. What is that? Cash sales. You have done a sale and in return you got the cash. So first check with the real rule what is coming in, what is going out. What is coming in? Whenever you are making a sale, what is coming in? Cash is coming in. So debit what comes in? Debit what comes in? So cash account data. I have debited cash because cash is coming in. Who is telling that? Am I telling? No. Real account rule is telling that whatever is coming in, cash is coming in, cash is real. So debit that. Now what to credit? Is anything going out? Goods are going out? Yes. But goods are going out, that is called as a sale, and sale is an income point for us. So according to nominal, credit all incomes and gains. So sale to sale, because sales is an income point for us. So credit all incomes and gains. So I am crediting the sale. How much is that? 18,000. 18,000. Okay, write the narration. Being goods sold for cash. Okay, close this. So here you have completed the transaction. The last transaction in today's video. Okay, in today's video, Mahesh returned goods rupees 2000. Now Mahesh has returned the goods worth rupees 2000. Now when Mahesh is returning the goods, what we are receiving? Goods. What is that? Debit what comes in. Now we are receiving the goods. That is, once you made a sale, now you are taking back that. That is sales return. Mahesh returned goods. When will Mahesh return goods? First you should sell to Mahesh. Then only Mahesh can return you. Otherwise Mahesh can't return you. Now Mahesh is returning. It implies that is sales return. Okay. So debit what comes in? Sales return. Now goods are coming in. Next, what is to be credited? To Cash is not mentioned here, cash paid for that goods not mentioned. So name is involved, Mahesh, that is person is involved. Now Mahesh is in the position of receiver or giver. Mahesh is returning, so Mahesh is giving, right? So Mahesh is in the position of the giver. So credit Mahesh to Mahesh account. How much is the value of goods? 2000 and 2000. So what is the narration? Being goods returned by Mahesh. Okay. So in this video we have only seen cash purchase, cash sales, credit purchase, credit sales, and purchase return and sales return, because I can't cover in a single video all the transactions. In the next video I will select the expenditures and incomes, like salary paid is an expenditure for the business, electricity bill paid, water department bill paid, transportation charges paid, advertisement charges paid. All these I will cover in the very next video. For today we have seen goods purchased on credit and on cash basis, and goods return and sales return. We have seen this. I want you students to follow with this, and if you have any textbook or material, try to practice the transactions of goods purchased and goods sold on cash and credit basis. Okay, so that's all from today's video, and share this video to all the intermediate first year students or the person who want to understand the accounts, because this is the basic and first step of preparing accounts. Okay, thank you everyone for watching the video.